Time now for the markets with Leighton. And Leighton, a couple significant reports in the poultry sector.
That's right. We'll be telling you what the implications of those are for the #1 commodity in Mississippi. We'll be talking with our Extension Ag economist. Also, since our last program, China makes a big purchase of U.S. corn. India lifts its ban on cotton exports. And pork may benefit from the misinformation about BSE. As we record this week's edition, soybeans are moving lower in price. However, many analysts say they see some big moves coming in the opposite direction. More sales to China were announced by the USDA earlier this week, and this is seen as new evidence of the continuing strong demand from that area of the world. And the declining South American crop, well, it is helping limit any losses in the soybean pit. Now, the point to remember, say traders, is that there's a lot of talk by technical analysts that they expect front-month soybeans to trade $16 at some point in the near future. A major export sale of U.S. corn to China was reported since our last Farm Week edition. This purchase has renewed concerns that Chinese demand could stretch the already tight U.S. inventories of corn. Analyst Virgil Robinson says export sales like this are only going to push prices above their recent trading range.
This week, the combination of old crop and new crop corn sales, the largest in total, dating back to, I believe, 1991 or 1994. So clearly that underpinned the market and provided a lift in futures and in cash. Now, interesting, the inverse grew stronger. New crop corn futures week over week were up 2 cents.
Jones reported that on Monday of this past week, India lifted a ban on cotton exports, a ban that had been implemented back in early March. Now, initially, this news sent old crop prices sharply lower. Now, additional cotton available for export is bearish for the United States as a competitor, but analysts say India has even lost some stature as a reliable exporter because of its actions. Now, looking at world production, the International Cotton Advisory Committee is forecasting a 13% dip in the Chinese harvest for 2012-2013. If it happens, that will be that nation's weakest cotton harvest since 2005-2006. On the other hand, the organization sees an 11% increase in the U.S. harvest, assuming that improved weather and lower abandonment takes place than in 2011. This is higher than the USDA's forecast in February of this year. Our trivia quiz transitions us into the livestock side of the markets, and here is this week's question for you. Who is the world's largest importer of softwood lumber and logs? Your choices for an answer: Japan, Spain, China, and Australia. We'll have the answer coming up here in a moment. In the closing days of April, the government provided a snapshot of the chicken industry. Extension Ag economist John Michael Riley joined me in studio Thursday to discuss the poultry production numbers with me. John Michael, let's begin with broiler production and what's happening now as opposed to 1 year ago.
We've seen quite a pullback in broiler production, down about 5% from a year ago levels. Really started about this time a year ago when inventories, chicken and cold storage was up about 8.5%. Drastic increase there. The industry started pulling back. We've seen chicks placed drop about 7.5% over the past 6 months, pretty steadily at 7.5% over the past 6 months, which has definitely pulled down the number of birds that have been going to slaughter, and thus the lower production number.
All right, now of course feed costs are what these companies are having to deal with, soybeans, corn, other ingredients. That really hasn't changed a whole lot as far as helping the industry, has it?
If anything, it's gotten worse as we've seen soybean prices go up. Corn prices have been trending up a little bit over the past number of weeks, so it's actually moved against them. But the good thing is this pullback in production that we have seen in the industry has helped out with prices. Overall, bird prices up about 7%, largely due, quite interesting, to an increase in leg prices. We haven't really seen an increase in breast prices, but we have seen quite a big increase in the lower value meats. The leg price is up about 15%, so that's really surged, helped out with output price.
Now, what about the export picture for chicken?
Pretty much similar to all of our ag commodities. The dollar has been increasing, which is never a good thing, but we are expected to continue to increase our chicken exports over this coming year.
So for the remainder of this year, pretty much things to continue as they are right now?
Should at least be steady to better for the industry.
1 week after the announcement that a BSE positive cow was found out in California, the U.S. Meat Export Federation says that our foreign beef customers are pretty much staying put. However, analyst Walt Hackney says there is some animosity about beef out there in the world, animosity which is positive for the hog markets, where some poor demand has been a problem.
Pork is actually in the catbird seat right now because of some of this anti-publicity going on with beef. Pork is cheaper, it's as consistent, probably more consistent. The consumer just may step up and make pork the meat of choice.
And just before our feature story, here's the answer to that trivia quiz we posed a few minutes ago. It is C. China is the world's largest importer of softwood lumber and logs.